Welcome to our crucial topic on green banking, where we are in a world where the role of finance in financing sustainable and environmental initiatives is at a very pivotal point. Today, we have gathered a group of experts from different fields, from banking, finance, asset management, sovereign wealth fund, and investments, to give you insights about the opportunities, the challenges, and to share their experiences with the live case studies from their recent issuances. You might hear in the previous session where our colleague discussed the importance of green financing, but within this session, we're going to give you a flavor of what happened in the UAE and the UAE efforts to push that agenda toward the UAE 2050 zero net carbon. Before introducing our guests, I would like to share a personal story. So in 2011, I was a student at Masdar Institutes. I was doing my master's there in engineering system management with a focus on sustainability, where I did a research on something called the clean development mechanism, where I examined the impact of more than 500 projects within this scheme that targeted environmental sustainability and social impact. And I would say that the biggest challenge was financing. So without the proper financing and the banking tools, those projects were very difficult to do. But this was more than 12 years ago. So our panelists today will share more insights. How did that change and what are they witnessing? So with me today on the panel have Sandra De Silva from HSBC, Vice President of Sustainable Debt Capital Markets, Hashim Al-Attas, Abu Dhabi Region Asset Manager for TAQA, Mohammed Al-Hashmi, Senior Vice President, Corporate Funding from Mubadala Investment Company, and Mishal Al-Mtairi, Executive Director, Institutional Sales, First Abu Dhabi Bank. I will start the first question to Sanda. Over the past 18 months, what do you think was the new flavor of green? What were the new trends? What have you been seeing from your banking seat?
Thank you, Sultan. And perhaps after the session, we should compare notes because my master's thesis was on green and biodiversity bonds. So let's chat later on what's changed. First of all, thanks again to the Mubadala Youth Council for this opportunity. It's fantastic to be here and also to be joined by my fellow esteemed panelists. In terms of answering your question, I think there's been, since the green bond market has been in existence for quite a number of years, we're seeing quite a few new flavors of green, so to speak. The extension into social, specific labels and thematics coming out, whether it's gender bonds targeting women empowerment, whether it's blue bonds targeting marine conservation. There's a lot of specific instruments that are coming into play to fund very specific causes. Now, having said that, I think it's also important to take a step back and talk about what happened this year, over the last 18 months, as you asked. It's no secret that 2022 was a pretty tough year in terms of financing for various reasons. We had geopolitical tensions, higher cost of financing, poor economic outlooks, etc. So 2023 was somewhat of a rebasing of that. And the ESG market was no different to that. And I think it's really important to call out that a lot of that rebasing came from this region. If you look at the numbers and the stats, the Middle East region was responsible for a lot of ESG-labeled issuance. We've got two debut issuers who came to the market, sat here on this panel. We had the Mubadala and TAQA issuances. And I think it's really important we recognize that. And I think that I would call out as a big trend this year.
Thank you, Sanda. I think if you look at COP28 this year, I'm very happy to see that many sessions are labeled as green financing or green bonds, and you see the trend is increasing. So as Sanda mentioned, although rates are being hiked, we are in a very high rate environment, one of the highest of all times, but I think that there is an increase in the level of green issuances. And I would like to applaud the United Arab Emirates for doing that, for being so committed to their 2050 target. I mean, if you are aware, the UAE was the first Gulf country that agreed to the Paris Agreement, and also the first to announce their 2050 zero net carbon vision, which is something dramatic. So continuing on that, I would like to ask Mohammed Al-Hashmi on the recent Mubadala issuance. Mohammed, why did it take Mubadala so long to issue the green financing? Although we have Masdar, we have investments in Tata Power, for example, why did it take so long for Mubadala to start?
Thanks, Sultan. So maybe taking a step back, and it's a great question. And we get that question quite a lot. So taking a step back and looking at Mubadala, we've always been a responsible investor since our establishment, and that remains core to us till today as part of our investment approach. We're driven by our values with a commitment to responsible investing. Now, your question is very good, and as part of where we sit in Treasury and part of funding, we have a very proactive investor relations strategy where we actually engage with investors globally across the world, and we've seen the direction the world was taking towards green financing more than 5 years ago. So this has been on our radar for a while, and we've noticed it and flagged it and been working towards it. But the message from our leadership was very clear. We could have done this a few years ago, but the message was lead by example. As in, first, we'll start implementing responsible investing and ESG principles across the organization from an institutional perspective. We've always been a responsible investor, but taking the step to institutionalize really the ESG principles, incorporate them from a top-down approach and a bottom-up approach, not just from a strategy perspective, but fully incorporating them into the investment life cycle, and then really going to the market and speaking about results. So instead of promising and talking, actually acting, having results, then coming to the market in a tangible way. And I think we've achieved that successfully, as Sanda mentioned, because what we worked towards was not establishing a framework that meets Mubadala's purposes. We want to actively contribute to the development of the green financing market globally, and as well as being a global responsible investor to push the market to the next level. So if you look at the framework, we've took the time, we've took the effort to really take it forward, to make sure that it's not just a benchmark to Mubadala in the region, but something that could be referred to globally. And we've successfully achieved that. And if you look at the objectives of the ESG strategy, why have we done this? It's to align our funding strategy with our responsible investing objectives, and we've successfully done that. I mean, the demand on our recent bond was staggering. We've done a $750 million green bond just in October, and we had more than $6 billion of demand. So that means there was over 9 times oversubscription. And that just tells you there is significant demand for green financing instrument from reputable investors and highly regarded issuers. And it actually was the highest diversification we ever achieved on any of our bond issuances. 75% of the demand came all from global investors, which was really a testament to the hard work and the validation really of the importance of a green financing framework.
Thank you, Han. I think being myself part of the Mubadala Treasury team, I've been seeing a lot of issuances this year. So I would say like within Mubadala, doing the green issuance wasn't like a mandate we were doing just to tick a box, but it was to prove our commitment to the UAE vision, to our leadership vision on delivering the 2050 targets. And this is something, to be honest, I've been seeing the UAE government nudging most of the companies, if not all. And this is one of the reasons why industry giants like Mubadala and TAQA have been very busy. So my second question will be to Hashim on the TAQA issuance. But let's take a step back and think, why did TAQA have a green framework? What are the benefits of having a green framework? And what is the incentive and what are the reasoning behind that?
Thank you, Sultan. I believe it's a good question. Why do we have a green framework? I believe there are many reasons for having a green framework, financing framework. Mainly, it's to address the growing investor demand for such green financing. And also, as you can see from the COP28, the whole world concerns about the climate changes and how to mitigate the impact of climate changes. So I believe it's the green framework playing a crucial role in addressing the environmental challenges and the sustainability challenges as well. So I believe it's important. Corporation now recognize the importance of framework, recognize the advantage of such green financing, and the landscape is evolving, and everyone now is seeking for green financing. As you can see from Hamid Al Hashmi answer about the Mubadala, it's very attractive. Became now it's even competing the traditional financing that one is available in the market.
I was just told also that Masdar they just signed a bridge to bond facility of 500 million. So well done to Masdar. This is to show the commitment again of UAE, and I think for every single dollar or dirham of M&A Masdar is doing, people on this panel they are benefiting for that to allocate their green bond proceeds to. So let's move to a slightly different topic, but within the banking sector. So I'd like to touch on the carbon credit schemes with our expert Mishal from FAB here. So Mishal, tell us more about the voluntary and compliance requirement schemes for carbon credit.
It's an interesting topic, Sultan, because you sit here and you hear everyone talking about green bonds, green financing, ESGs. However, when you look at credits, it's part of the same umbrella when it comes to green energy. And the way it works is you've got two main markets currently, which is the compliance market and the voluntary market. Now, what's the difference between each one of them? The compliance market is mostly located in the Europe section. It's the oldest, it's been there for 2005, 2006. It's the largest, it has the most volumes. And the most important thing is it's highly regulated. Everyone knows exactly what's going on over there. Unlike the voluntary market, which still, I would say, more focused on projects rather than the regulation. But if you look at compliance, for example, and the way it works, within the Europe region, you have regulations which force certain industries to look at credits. And then within that industry itself, you'll have certain companies that fall under that regulation. And the way it works is no matter what you produce during the year, no matter what you're sending out during the year, however, come December, you have to be within a specific limit of carbon emissions. Now, what happens if you don't? That's where the carbon credits come, and where people will actually, or companies would actually buy the carbon credits and net off whatever excess they have. And the other part of the world is where you're selling the carbon credits. So while you might be buying carbon credits, someone else might be selling, and then at the end of the day, it kind of net offs. And it's kind of an incentive for companies to reduce the emissions that they have. And then you look at the voluntary market. The voluntary market works mainly on the projects, not on the regulation. And the way it works is company A would come in with a specific project to reduce emission or plant trees or you name it. And then you have the registries who would come in and value this project. They'd look at the project, they'll see what carbon credits are they applicable or not, at what quality they are as well. And these are the main two topics. Or if you look at it even from another perspective, for an individual sitting over here, you might be thinking, okay, as an individual, what can I do to help the world when it comes to green energy? I'm not sure if anyone has tried flying on Etihad or not. If you have, you can raise your hand. All right, so I see this side of the panel does. So if you go into Etihad's website, upon buying a ticket, you can actually purchase carbon credit for your individual emission. Now, this is an incentive for individuals to take up the challenge and say, listen, like corporates, like governments, we can play a role in it as well.
I mean, touching on airlines, I think being in a region where we have two of the airline giants, I think, مش عارف, you can highlight what are the requirements from local airlines? Let's not focus on UAE, but say GCC, because those airlines, they fly to Europe and they need to comply with regulations. So what's the regulation that they need to capture, and what's your role as a local bank or like a GCC bank to support those airlines?
Well, Sultan, I would say our role in FAB is not only the airlines, it spreads across. However, if you look at the airlines specifically, we're blessed to be in a region where I'd say we have the top 3 or 4 companies in the world. And the benefit of having these companies is you would fall under certain regulations and requirements, but not like what's going on in Europe and the US. Now, we still fall under the voluntary market. We have seen initiatives by the government to adapt more into carbon or greenhouse energy. There's not much requirements for the airlines as of today. It's mostly given that there is the cap or the quota is based on the 2019, 2018 numbers prior to COVID. Now, luckily enough for our companies in the region, they haven't reached to that level yet. So once they do get to that point, that's where things might be looking interesting for them, and they'd fall under certain regulations as well. We've seen some who would net off their emissions if they're flying in Europe and the UK, but I would say we're still not at that level yet.
Thank you, Mishal. Santa, coming back to you on the role of banks in structuring debt capital market structures, what role do you play within HSBC?
So, I mean, formally, my title reads Sustainable Debt Capital Markets. So you would allude from that involves structuring fixed income instruments, so structuring ESG labeled bonds. But I think the roles become more than that, especially over the last 2 to 3 years. I think there is a bigger conversation to have rather than just about what is the right funding instrument. It's also about, as an institution or a corporate is looking at bringing ESG into their funding strategy, are you actually ready for that? Are you set up for that? And I think, Hashmi made a really good point about Mubadala wanted to come to the market when they were ready. And when they were very confident in how they were aligning the framework to what their strategy is. And I think that's an important point to balance with the urgency of the financing that we need for ESG goals. So it's about having that confidence and giving our clients that confidence that what they are bringing is actually a robust instrument in the market. So overall, I would say the role of structuring has become broader than just looking at, does this meet the ICMA principles? Do you have the reporting requirements? Do you meet the reporting requirements that you need to meet? It's become a broader conversation than that. And the last thing I would add is, as a global financial institution, we have a pretty interesting vantage point where we see multiple sectors, multiple regions, and multiple institutions. So being able to marry the relative pros and cons and figure out what's right for the client, that's probably what the role is now.
And I think this shows the deep collaboration between banks and investment companies or sovereigns like Mubadala. But not to forget, there are one big team that we rely on heavily within the DCM world, which is our responsible investment or ESG team. So Hashmi, maybe you highlight the synergies you have between the corporate funding team and our ESG team.
The responsible investing team is really the steward of pushing the institutionalization of ESG principles across the Mubadala, and they've really taken it forward, and we've worked very closely with them. There's a lot of synergies. They've been heavily involved with us when we're working on establishing the green financing framework, and they were absolutely crucial in the ultimate outcome. And the reason it's really important is we always want to make sure that we listen to the investor community. So we're one of the largest DCM issuers in the region with over $22 billion of live bonds. And we have a substantial investor base from all over the world. And as part of our proactive engagement with our investors, where Sanda was involved, we've done a non-deal roadshow, and the RI, the responsible investing team, was with us. And it's really about making sure we hear from the market what's their feedback and engage with them in good faith to push this forward. Because it's very easy to everyone operate in a silo, and then we don't really help develop the market collectively. It's really about stewardship. And a question that keeps coming to us is how do you really manage your portfolio? And it's such we are a global company with 75% of our portfolio is global. We have presence in nearly every continent with different sectors. So it becomes Mubadala is exposed to a lot. And I think a key message here is it's really stewardship and active engagement with our portfolio companies, our investments, to really push it forward. From a funding perspective, we always wanted to align the funding strategy with the responsible investing objectives across the organization. And we've successfully done that with the green financing framework and issuing the first green bond, and we'll continue doing so and continue actively engaging with them.
Hashim, feel free to add.
Nothing to be added, actually. He covered all the...
How about then, Hashim, we touch on what do you think from TAQA perspective there is an importance to deliver those goals with regards to the UAE 2050 vision? Or how do you integrate this whenever you look at an investment, specifically, let's say, in Abu Dhabi?
Yes, I believe during this year, TAQA launched the green financing framework, which will contribute mainly on developing a new clean energy project, a renewable project, and waste management, wastewater management project, which will directly contribute to the UAE target of net zero by 2050. And I believe on top of that, we have also TAQA, we have our own targets to achieve reduction of 30% of carbon by 2030, which also will contribute earlier in the target of the global target of UAE.
True, I think TAQA was one of the leading companies in UAE in taking initiatives and being one of the first company that accepted the UAE vision and pushed forward across all their subsidiaries. So well done for TAQA on that. Mishal, coming back to the carbon credit. So as we are speaking about the United Arab Emirates, what key challenges do you see in the UAE for adopting those schemes, and how do you play a role as a bank, as a market maker, to support the UAE ecosystem when it comes to carbon credit?
I think it's interesting to look at how the carbon market has evolved over the past couple of years. It's still a new market. So I'd say one of the main challenges we have is lack of awareness. We have a lot of people who don't really understand what role does the carbon credit plays, how do you get it, how do you control it. Even when it comes to regulations, there's still a lack of regulation in place to monitor and to act at the best interest of both the UAE and the companies. But when you look at how new it is, there's always a benefit of something new coming into the market, and that's an opportunity. If you don't grasp on this opportunity, then you're lacking or you're stepping behind. Other people will not wait for you to adapt to it. Now, when you look at FAB and the key role that it plays in the UAE, we're not there just to finance. We're not there just to give incentives when it comes to carbon. We're taking it as an initiative. We're the key stakeholder when it comes to banking in the UAE as a local bank to facilitate, to help share awareness, create awareness, share information with clients, share information with individuals as well. So the whole idea is bringing everyone within the ecosystem in one place. If you look at the partners that we have, we've partnered up with governmental entities and governmental bodies. We've partnered up with regulation entities. We've had a couple of MOUs done with both government and companies as well. And that's from just a partnership perspective. But then you look at the clients as well. We're trying to facilitate whatever carbon credit that you want to buy or sell. If you have a project that generates carbon credit that you don't really need, you can sell it and make money on it. If you're looking to buy carbon credit, this is something that we as FAB can play a role in. And like I said, we bring everyone together. As FAB, we're part of the Carbon Alliance that was designed or initiated by Sheikh Hashamma bin Sultan Al Khalifa. And we work closely with the likes of TAQA, Masdar, other entities as well, to have a better understanding of the market and to share it within the UAE as well. All in all, we look forward to having the UAE achieve the projection that it has for 2050, and we hope that FAB does play a huge role in it as well.
I think awareness is an issue not only in UAE. I think it's a global issue when it comes to green financing, but this would touch on multiple aspects when it comes to not only financing, but monitoring, the regulation, what countries implement in terms of rules, or the usage of third-party data. I mean, data by itself, it's a hot topic right now. So I think this issue is not only for the UAE, but it's a more of a global issue. I would conclude with a question to both panelists, Hashim and Mohammed. What do you think would be the trend for green issuances, and what's the benefit for Mubadala and TAQA to do such programs?
The key, so if I have to think about what's the key benefit, it's really help finance and refinance project that will help build a low carbon and resilient climate economy that's aligned with the UAE and Mubadala net zero vision by 2050. It also helps us get funding for and contribute to portfolio companies that have really enabled environmental impact as set by the targets by the Paris Climate Agreement, the UN Sustainable Development Goals, etc. And the key benefit is really tapping a new pool of capital that collectively wants to have an environmental impact. Now, you call it green. I don't know what it will be in 5 years. There's concepts of blue bonds, blue funding, etc. So there's a lot of projects to be done, but I think from an ESG sustainability perspective, we're still in the early days. There's going to be more products, more innovation coming, and it's very exciting to see the world really coming together to have a positive impact and fund projects that do so.
I believe the green financing. Recently, TAQA, for the first time, they issued a 10 years, $1 billion bonds, green bonds, with 10 times oversubscribed for those points. I believe this is showing you how the investor now is keen to have those kind of investment, and also open the door to other investors to come for other type of investment. So I believe as TAQA we have a target by 2030 to increase the capacity to 150 gigawatt. 60% out of 150 gigawatt will be clean energy. So by default, the clean energy, any financing for such new energy will be green financing, and I believe it's something it's happening whether we can see it or not. It's the trend is going there towards the green financing.
Yeah, I think you are very right on that. I think the evidence is we are here at COP28 in UAE at the Mubadala Pavilion, and the TAQA Pavilion is just next to us. Shows that we are here, our investments are also here. It's a true testimony of what we have been doing throughout the years. But I think what's also more important to highlight is without collaboration between banks, advisors, sovereign wealth funds, investment companies, this will not happen. And I'm very glad that apologies for that. I'm very glad that this panel is brought to you by the Mubadala Youth Council, and the entire panel is youth. So you can see the youth are taking action towards green financing and green banking. So, by the way, this is more than 50 years of banking and finance experience. Yeah. So this concludes my session. But if I want to leave you with something, I would leave you with a thought that wherever you are, whichever organization you represent, always think of the collaborative mindset. Because without collaboration, we will not be able to achieve anything. If it starts with you, then regulators, governments will take the step forward. Thank you so much.